Hello, my name is Scott Dahl. I'd like to thank you for tuning in to another one of my podcasts. I'm recording today right before the market close on August 27th. I haven't put something up in a while, so I thought I'd put this video up to kind of see where we're at now. Let's get right into it. So what I've got up right now is I've got the Standard & Poor's 500. I wanted to show you something that if I move this chart and get rid of the most recent 8 or 9 days of data, this looked horrible. You had a breakdown. You had two gaps. Gaps are bearish on the downside. And we came down with virtually no support except down here at this low and then down at this level right here. And then also what I had done is I had drawn a 45-degree angle line, what you would assume to be the normal trajectory on the market or a reasonable trajectory. So we could see that we were above that. We came back down. We came back in line, so to speak, with this 45-degree angle. And then what happened is we had this significant recovery out here. So you can see with hindsight that this was an excellent buying opportunity. I remained fully invested for my clients, feeling that we're still in a cyclical bull market that I think can run into the latter part of 2025. What I find interesting, and I wanted to demonstrate this. So this is sideways pattern. You can see that this is 1, 2, 3, 4, 5, 6, 7 days of activity, really not going anywhere. Now, it's very important for this market. This is a Standard & Poor's 500 that we break out to new highs. That would give us more confirmation that we're going to continue higher from these levels at this specific time. But this sideways activity can go either way. It can go up, it can go down. This is more than likely considered what's called a continuation pattern. We should see a trend that's continued higher, but there's just no guarantees of that at this point. It could go either way. Now, remember, the Standard & Poor's 500 is a market cap weighted index. So what that means is the largest stocks that are in the index, they carry the majority of the weight. So if you look at the top stocks, I mean, there's one top stock. It's a top chip stock that's been really driving this market higher. So that stock, a few other stocks have been driving the market higher. And what it is NVIDIA. This is not a recommendation to buy or sell NVIDIA. All that I'm doing is using NVIDIA as an example. We have this same sideways pattern that looks similar to the S&P 500. So you can see that these top stocks are driving the S&P 500. So the good news is we've recovered. Good news is I believe we're in a cyclical, a shorter term bull market. I think it could run for a while. But if you take a look at this, so this is the RSP. Remember, the RSP is the S&P 500, but each stock gets an equal weighting. So the outsized large cap companies, like the big tech companies of the world, NVIDIA is an example, they don't carry any more weight than the other 499 stocks or whatever is in the S&P 500. So this is the equal weighted Standard & Poor's 500. It's broken out to new all-time highs. What that tells us is that we're now in a period where the other stocks in the S&P 500, the lesser loved stocks, they're doing well. So that's a sign that the market is broadening out, so to speak, but more importantly, that maybe there's less emphasis on these big stocks, and that's good because you need a lot of stocks moving higher in order for this trend to continue. But then we take a look at two more things. This is the New York Stock Exchange. You can see the data. This is a daily chart. It's all the way back here to November of last year. We see this tremendous rally, and then we see new all-time highs. Now, new all-time highs in the NYSE. Why is that important? Because the New York Stock Exchange is 2,038 stocks. It's not as narrowly based as the Standard & Poor's 500, which is large company stocks, or the NASDAQ, which is predominantly tech stocks. It's more broad-based. It's making new highs. That's a very positive sign that this move could have the potential to continue when you've got this broad-based index. It's making new highs. And last but not least, let's take a look at breadth. Remember, breadth is very, very important right now. It's important to me as a technician, but it's very important for the continuation of this bull market. This is the breadth. This is the participation of the 2,038 stocks in the NYSE index, and you can see that it has also moved to new highs. So if you have an index that's making new highs along with the breadth going up, which would indicate more and more of the stocks are participating in that rally, then that's a very positive sign for continuation. Now, there's one caveat that I would like to point out. So what I've got up on the screen right now is from a good friend of mine, Scott Brown, CMT, a fellow chartered market technician. He's an excellent technical analyst. And this is the election year seasonality. So what I mean by that is this is typically what happens in an average election year. We have a peak mid-September, then we have a significant sell-off into October. October creates a bottom, and then we have a few days before the election, we start this market rally that continues through the election. Regardless of who gets in office, it continues, typically goes into the following year. Will we see this? Well, it's a probability. And the reason I say that is you've got this seasonality, number one, but number two is we have some cycles, some major cycles that are bottoming right about in this particular time period as well. So there could be some downward pressure on the market. However, you cannot ignore the trend. The trend is the most important thing. We're obviously in a cyclical bull market as exhibited by the previous charts. So I just wanted to give you an update. This is where we're at right now. It looks positive. We should see volatility. We haven't seen a lot of volatility except for one period of time with the sell-off. So we should see more volatility. If you have any questions, give me a call. If you'd like me to look at your portfolio and give you an idea of where you stand and if you are allocated properly in my opinion, make good money in the future, give me a call, 949-497-6366. You can reach me at scott@dahlcapitaladvisors.com. Looking forward to doing more of these. I have some interesting things coming up, some conversations with different people that I think you folks will really enjoy. So thanks again for tuning in, and I look forward to doing more of these in the future. Thank you.